do we know about the $1.75 billion in the midst of a broader $5 billion package?
Yeah, so Goldman has underwritten this letter of credit. Our understanding is that they're in the market trying to syndicate out this $1.75 billion line of credit to other banks, maybe retain a portion of it, obviously. And this credit facility itself frees up WeWork to spend on growth, to reinvest in the business, to really focus on its core office sharing business in its key markets that it's identified, and to eventually hit its goal of becoming profitable.
Jillian, do we know anything about the $3.25 billion as part of that broader restructuring?
We do. We know it's going to be $1.1 billion, I think, of senior secured and $2.2 billion of unsecured bonds or high yield notes. I guess we'll see. They haven't come to market yet. It's unclear which banks will be involved in that portion of the debt financing. But again, I think bondholders have obviously really appreciated seeing Goldman step up for this. The bonds are up, I think, 10 cents to over 81 cents in the past month alone, and probably will keep climbing as it becomes clearer that this $5 billion package will be put together.
Well, and I like that you also mentioned freeing up about $800 million in cash. So much of the analyst reaction comes on the use of cash. You talk about investing in growth. Is that where they want to see this $800 million in cash being spent?
So I guess it continues to be about growth, but it's about profitable growth versus growth at all costs, which was the company's mantra previously when Adam Newman was sort of in the hot seat. Right now, the company's focused on its key markets, I said earlier. Markets like London, New York City, San Francisco. I think they've identified 12 markets where they'll continue to take leases. Already they've committed to a bunch of leases. They need this cash to construct, to build out these spaces that they've promised to clients, and to obviously continue growth in markets that they believe can eventually be profitable for them.